So good evening, everyone, and we'll just wait for another 2 minutes because people are still joining in, and then we'll start the session. So with me, I have Mr. Atul Penkar, who is a senior portfolio manager with Aditya Birla Mutual Fund. And just so what I have also done is I have just put up the profile for Atul so that all of our say distribution community and all the people attending this event would understand Atul. And so Atul has been with Birla for almost 16 years now, and he has got an overall experience of over 20 years, and he has largely been managing our offshore funds. So we used to have a few very well known funds. For example, India Frontline Equity Fund, India Quality Advantage Fund, Sun Life Excel India Fund, India Advantage Offshore Funds, and all these funds were managed by Atul. और अतुल ने इन सारे फंड्स में बहुत ही अच्छा परफॉर्मेंस दिया है, and they have largely been in top quartile in terms of performance for last entire decade. And apart from that, he is largely he has spent large time into research into IT, infrastructure, telecom, auto, and media. So largely service-oriented sectors is something that he was keen in terms of doing the research. And prior to joining Birla, he was with MK Global. So and he has done his engineering, and then he came to this side of the market. So this was overall about Atul. So Atul has been there with us, and congratulations, Atul, for the stupendous show that you have shown across our India offshore funds that you have been managing based out of Dubai. Now it's again a homecoming, coming back, and now you are managing our tax relief 96 and Bal Bhavishya Yojana. And if few of our audience would remember, so on 9th of March, we had done one session with one of our regional heads, Swami and Atul. And that was the time when Atul had, in fact, taken over. And it was, I think, hardly 1 or 2 months that Atul had taken over this particular portfolio. And he had shown some bit of conviction in terms of how he is going to manage this fund going forward. And we have actually started seeing some bit of positive changes, because although markets have not been supportive on the upside, but definitely we are seeing that this fund is falling lesser compared to the peers as well as the category. So definitely some work has gone, which is fetching some bit of positivity in the scheme. Although there is yet a long journey that the fund has to see. Now, Atul, before we move ahead, because we know your background, your experiences, and the way you have managed the funds. If I have to ask, what is your style of management? Is it value? Is it growth? So I think that would help all our listeners to understand you better.
Yeah. Thanks, Manish. So my investment philosophy is growth at a reasonable price. So essentially buying into growth-oriented companies, but at a valuation which gives you margin of safety. So that because India essentially is a growth story, and therefore we believe, and India also is an emerging market. So along with growth, you also get a lot of volatility. And therefore, I believe that GARP as a investment philosophy is best suited for Indian equity markets. And that essentially has been the investment philosophy that I have been following for the last many, many years. And it's kind of worked for me quite well in the last many years.
ओके अतुल, तो अब हम अपने फंड्स की ओर आते हैं. तो टैक्स रिलीफ 96, जब आपने इस फंड को लिया तो व्हाट वाज योर ऑब्जर्वेशन? आपने जब इस पोर्टफोलियो को देखा, और अगर मैं बात करूं टैक्स रिलीफ 96 की, तो टैक्स रिलीफ 96 अपनी इस कैटेगरी में दिस यूज्ड टू स्टैंड अहेड ऑफ most of the peers. It had got such a big name because tax relief 96, again since 96 this fund is into industry, और इन्होंने बहुत सारे अपने इन्वेस्टर्स का वेल्थ क्रिएशन किया है. इट वाज आल्सो नोन फॉर वेरी गुड डिविडेंड डिस्ट्रीब्यूशन that it has been doing for over so many years. Now suddenly there was some bit of challenges that it went through. थोड़ा सा टफ एक पैच आया in terms of performance. तो उस टाइम में जब आपको ये पोर्टफोलियो दी गई, तो व्हाट वर योर ऑब्जर्वेशन? आपने क्या देखा इसमें?
So I got this fund in the month of beginning of 2022. So in 1st Jan onwards, I started managing this fund. So when I looked at this fund, so at the face of it, when I analyzed the fund, the two, three things which stand out for this fund. पहली बात तो ये था कि ये फंड अक्रॉस सेक्टर काफी डाइवर्सिफाइड है. So there is no big concentration on one particular sector. So that was the first observation that I had. So that was a good starting point to have. So any fund, it's better to have very well diversification across various sectors. So that was one. Second observation जो मेरा था is कि ये portfolio में there was a lot of bias towards quality. So when I looked at the portfolio and went through each and every name that we owned in the portfolio, there was a lot of quality stocks which are there in the portfolio. And again, that's a good sign because quality portfolios, quality stocks tends to do well across time period. There are certain time periods when they underperform, but essentially there were no wrong stocks, I would say, in the portfolio. So it was good quality. And maybe at this point of time, Manish, I have one slide. एक slide है जो मैं दिखाना चाहता हूँ on how the portfolio was positioned.
Yeah, because अगर आप बोल रहे हैं कि it was very high on quality and diversified, then what went wrong? मतलब why the performance actually took a bit of challenge, especially in last 3-4 years?
Yes. So let me just share this thing with you. So is the slide visible?
Yeah, it is.
Okay. So now if you look at, let me just put into share. Okay. Is it visible now or it's dark screen?
Yeah, it's there. It's visible.
Oh. Yeah. So when you look at the portfolio and see the various sectors which are represented in the portfolio, it's a quite diversified portfolio as such. Even when you look at some of the names, so here I have given some of the names which were there in the portfolio. They're all good quality names and significant overweight position that we had across various quality names. Some of them are MNC in nature, but most of them are more of domestic-oriented companies. So that was one observation that I have. Your question, Manish, was why this particular strategy behaved the way it behaved in the last couple of years. And let me just take you through this history of this fund. So when you look at this chart, this is the white line is the way the fund NAV has moved in the last, say, 10 years, say from beginning of 2013 till yesterday. Okay, this white line is basically how the fund has done, and this orange line is essentially the movement of Nifty 500, which is the benchmark. Now, when you look at the chart below, okay, this green bars on the bottom of the slide, it essentially shows that when this green bars are rising, this is the cumulative outperformance of the fund versus the benchmark. So what essentially it means is from 2013, beginning 2013 till about 2018, mid of 2018, this rising green bars, it shows that the fund was accumulating performance. इसका मतलब ये है कि continuously the fund was outperforming the benchmark, and this happened till 2017. And 2013 से लेके 2018 तक we have seen various cycles in the market. So across cycle, this particular fund has done well and has gained outperformance versus the benchmark. And then came a period between 2018 till about mid of 2020, where you see this green bars that they have kind of remained flattish. So what it means is जो performance हमने gain किया था cumulatively, उसके बाद क्या हुआ है वो stagnant हुआ है. So the fund was essentially more or less in line with the benchmark. So benchmark का जितना returns है उतना returns fund दे रहा था, and which is a good thing, because if you recollect, 2018 and 2019 was a period which was very tough for markets, and in that kind of market environment, the fund actually hold on to its performance, which it had delivered till 2018. And then we seen this period from mid of 2020 till about 2022, mid of 2022, where the fund, if you see this, it's sloping downwards. So what it means is the fund started losing performance. So which means it started underperforming the benchmark, and then again it's starting to gain performance. Now let me just deep dive across various time periods and explain you why this particular phenomena has occurred. If you look at 2020 in particular, because that was a time when the fund actually started, the performance started sloping down, which means that the performance versus the index slipped. So if you look at, there are a lot of these lines here. So just to explain it simply, ये जो bold white color का line आपको दिख रहा है, that is essentially the movement of Nifty 500 index. Okay, so if you see Jan से लेके Feb तक market was flat, and then COVID happened, market जोर से गिर गया, and then there was a slow and steady recovery in 2020 throughout the year. And these are some of the quality stocks which I've listed in the previous slide, how the quality stocks behaved in 2020. So initially, आप देखो, from Jan till March, during this period, most of the stocks were outperforming the benchmark. So जब market जोर से गिरा, तभी काफी सारे stocks were outperforming the benchmark. But then when market started to move up, you will see that again, some of the stocks have outperformed here if you look at throughout the year, but some of the stocks have underperformed. So essentially, initially we gained and we lost in the second half of 2020. And therefore, I say that it is a story of two halves. In first half, we gained, and in second half, we started losing versus the benchmark. Then let's look at what happened in 2021. 2021 was a year where market delivered very strong performance. So when you look at this as a base, that is a starting point in Jan 2021, and you see Nifty 500, which 100 का 130 हुआ, which is rebased. So essentially 30% kind of returns आया है. But majority of our quality stocks that we own in the portfolio has underperformed. Just two stocks have outperformed the Nifty 500. So, and it doesn't mean that there's something wrong with the quality stock. It's just that quality as a style underperformed growth in 2021. And this chart really shows you that how growth has done and how quality has done. And quality clearly has underperformed in 2021. Now let's look at 2022, the current financial year. Again, if you look at from Jan of this year till about yesterday, market has been moving up and down, but broadly it's kind of been trending downwards. So if you see, If the starting point is 100 over here and the end point is say 98, 92 here, that means there is 8% drawdown in market, and you will see that the quality stock, the same quality stocks, few of them have outperformed, few of them has underperformed. So there is a mixed performance of quality in 2022. So net Manish, what I was trying to explain through these 3-4 slides is the portfolio which was quality bias did well in the previous cycle, but it's just that there was very strong growth in 2020 and second half of 2020 and 2021. In that particular period, there was significant underperformance because quality as a style underperformed during this period, and that's the reason why the fund has lost its performance. And again, going back to this slide, this is the red dotted line. If you see here, this is the period where whatever we had gained was lost during this period, and that is purely attributable to what happened in the market post-COVID rally.
Was it also because retail participation was very high in the market and they were largely chasing mostly IPOs or small cap companies rather than quality?
It could be a variety of reasons. So obviously, small mid cap stocks doing well, or IPOs doing phenomenally well, or there was a broad-based rally, or so there were various reasons. But essentially, quality में क्या होता है? Quality stocks, the businesses are very strong, but the valuations are also on the higher side, and therefore beyond a point, valuation re-rating difficult without commensurate increase in earnings growth, right? Because earnings growth आपका stagnant रहा and valuations were on the higher side. इसके वजह से quality stocks have underperformed, and obviously there was broader markets did really well in second half of 2020 and the entire 2021. So that could be one of the reasons why the fund underperformed. But I think more important is going back to your previous question was the view on portfolio at the first glance. So essentially, the observation was there was too much of quality and not much of growth which was built into the portfolio. So that was my observation on the portfolio.
So Atul, we understood when you took over the portfolio, you showed everyone about the say constitution of the portfolio, and then the recent as well as the say medium and long term performance track record that it had. Now if I have to ask you, now that you have taken over, you have already spent some good, say 5-6 months with this portfolio and with this scheme now. Now, how are you positioning this fund from here on? And what is it that you are trying to say tweak or make changes in the existing portfolio? And what are the basis for that?
Yeah. So, Manish, when I spoke about in the previous call as well, essentially the view was to have to kind of get in some growth-oriented stocks into the portfolio, because pure quality will essentially have ups and downs depending on the market movement. But from a longer term perspective, it's good to have a growth bias and a quality bias also in the portfolio, and that is the balance that I intend to achieve in the portfolio. And therefore, so let me just quickly give a quick recap of how this last 6 months or 6.5 months the transition has been in the portfolio. So if you look at December 21, this is across sectors. What were the weights of various sectors in the portfolio back in December 2021, and this is essentially what's the weight in the portfolio currently in July 2022. So you could see, consumer discretionary, financials are the two sectors where we have increased our weight in the portfolio. So essentially, consumer discretionary and financials are essentially growth-oriented sectors. Those are sectors which are domestic facing, and my view on the domestic economy is positive, and that's the reason why I've increased exposure into consumer discretionary and financials. And within that, if you look at consumer discretionary is a broader basket. So it comprises of automobiles, auto ancillary companies, your retailing, your QSR. So basically anything to do with the discretionary spend of consumer gets captured here. So the stocks which I added is Maruti Suzuki, Tata Motors here, and stocks which I have kind of reduced or exit is MRF here. Similarly, financial was a big underweight position for us in the portfolio back in December 2021. And as you know, we were looking at growth coming back in India and credit growth picking up. The view was, and bank stocks are significantly underperformed, and that was a good opportunity for me to increase exposure into financials because that was the highest conviction. And then we went ahead and increased exposure in overall financials as a sector, but predominantly more into larger banks like ICICI Bank, HDFC Bank, SBI, and Axis Bank. So these are the stocks that we added, and then some of the stocks where we reduced were IDFC First Bank and Kotak Bank. Kotak Bank we have a positive view. It's just that the weight of the bank in the portfolio was slightly on the higher side, so we trimmed a bit. But essentially, this is the kind of view that I have taken, and that's how there have been alignment across various sectors. And clearly, if you see the stocks, the positive, the bottom two tables here, you can see the stocks which have been added, the top 10 stocks addition, and the top 10 stocks reduction, which has happened in the last 6 months. So essentially, it's kind of realigning the portfolio, navigating the portfolio from a pure quality bias towards slightly more growth bias. And remember, we are in a phase currently where market is giving us opportunity to realign towards growth, and most of the stocks, growth-oriented stocks, have underperformed in this calendar year. And I thought that was a good opportunity to slowly and gradually increase exposure to these growth-oriented stocks. And again, Manish, just to highlight, the action that we have taken has kind of helped us to, again, slightly, although these are initial days, so slightly we have started gaining performance, and it's also reflected in, this chart. So if you see, this is the bottom chart. You see, this is the monthly outperformance or underperformance of the fund versus the benchmark. And you could see that in the last 3 months, we have started gaining performance versus the index. So I believe that we are in the right direction, and slowly and gradually we will navigate the portfolio to be able to deliver consistent alpha in the portfolio. And at the same time, we'll manage overall risk in the portfolio.
Yeah, in fact, this is a very powerful information that you have shared. In fact, and particularly, I like one thing that you have not overhauled the entire portfolio. So you have rather trimmed a few sectors, few stocks. At the same time, you have also bought into your conviction ideas that you feel should do very well, especially banking and financials, auto, consumer discretionary, are a few things which I think you are very positive on, and that is definitely reflecting on your portfolio as well. Now, Atul, coming to the current scenario, if we look at, there are so many uncertainties which is actually hovering around across the markets, across the economy, especially on inflation, on growth, on the way, say, credit offtake that did not happen for a long time, and then crude and currency. So many factors which are actually showing so much of alarming situation and scenario for say a country like India as well as globally also, because we all were coming out of that pandemic and moving towards growth phase, and suddenly this inflation started hitting every economy. So what is your take on the current market scenario, and how do you look the market in the coming times?
I think we are in. If you look at where we are today, so my view is clearly we are in the midst of a storm, and it's essentially in the global macro, which is runaway inflation, and that leading to high interest rates, and global central bankers across the globe raising interest rates. So we are in that kind of storm, and every country has its own macro challenges, whether it's a US or Europe as its own challenges. So I think, fortunately for us, India is, of course, witnessing these headwinds of higher inflation, thanks to crude, and the recent Russia-Ukraine conflict also has pushed inflation higher, whether it's food or the crude oil prices. But I think we are in a situation where the crude has softened a bit, and with normal monsoons, the food inflation also will remain under control. So currently, if you look at so there is turmoil globally, and I would say that India is essentially in a very strong footing at this point of time, because the view is inflation has clearly topped out, and from here on, we will see that inflation will come off gradually. And there are 2-3 reasons why I believe that inflation will cool off as we move forward. Is essentially it started with the government action. So first is they kind of attacked the high fuel prices, and they cut taxes on petrol and diesel. So fuel prices have become more affordable to that extent, right? And therefore, there is a direct impact because of fuel prices coming down, and the indirect impact is because fuel prices kind of feeds into transportation prices as well. So whether it is transportation of cement, steel, or vegetables, so that cost, indirect cost, also comes down to that effect. So there's a direct and indirect effect, and therefore we've seen that the first leg of initiatives by the government has helped to bring down, at least to a certain extent, the fuel-linked inflation. The second is in terms of the prices of various commodities, whether it is crude or even metals, right? So after the initial flare that we saw in crude and oil commodities prices, I think we are now seeing good pullback in crude now, which is below $100, and we have seen pullback in across various commodities, which is down by anywhere between 15 to 30%, depending on the commodity that you're looking at. So essentially, India is imports its energy requirements. So to that extent, and also because currency has depreciated, we are importing inflation into the country. So I think that is something that is worst is behind us. So I think inflation will over a period of time come down, and that will give leeway for the economy to kind of maneuver these times of high inflation, and then growth again is ticking is quite good. That is getting reflected in the credit growth in the country, which is at 7-year high. So I think the good thing is India is on a very strong footing on macro front, and that's the reason why the bullishness is on domestic facing sectors, where we believe that the growth rate for domestic sectors and companies will remain buoyant for some time.
Okay. So and apart from this, so I would request all our participants, if you want to ask any questions, you can just put up on the chat box or question and answer segment. We will ensure that we take all the questions that you have. So before we move to that question, Atul, one last question from my end. Now that you are managing Tax Relief 96, and if I have to say that, what is your medium term and long term say outlook on this particular fund? And if you have to look at creating this as an ideal portfolio, this is the objective with which this fund is operating. So on that ideal portfolio parameters, the current portfolio, how much inclination or how much of that is actually inclined to that, and how much of changes you still feel would be required in this portfolio in the coming 1 year, 3 year down the line?
Yeah, I think that's a good question, Manish. So I shared my views, near-term views on market. So clearly, it's been clouded by what's happening in the globe, whether it's inflation or higher interest rates. But I think if you were to look beyond the near term, I think the longer term tailwinds is something that one cannot ignore. And again, with India clearly stands out because the way the Indian GDP is growing. No, in the next 5 to 6 years, we will be a $5 trillion economy. So, which essentially means that per capita GDP, we will cross $3,000. I think that is something which is very positive for consumption as a theme. So from long-term consumption, I think it's one theme, and which is where our portfolio transitioning is happening towards more consumption-oriented sectors and companies that we own in the portfolio. So that is one theme, which I believe will play out over the long term. I think the second theme that, from long-term perspective, is the entire thesis of formalization of Indian economy, and this really started in 2016 post the GST. Or rather, for the demonetization followed by GST, and then various regulations at every given point of time. So essentially, we are now, as an economy, moving towards more formalization. So it's a kind of level playing field for organized companies and organized sectors versus the inorganized sector. And that's the reason why we're seeing that the organized sector is gaining market share from the unorganized sector. So that is again positive for corporate earnings growth. So that as a theme will continue to, and there are various sectors across, whether it's in industrials or financials, where you see that there will be market share gains which will happen, and that is a very long-term thing that we will like to play in the portfolio. And third, is the entire investment theme in India over the long term, because we believe that irrespective of whichever government comes to power, I think the only way of productive spending is to spend on infrastructure, whether it is road, railway network, or ports, or any other infrastructure asset creation, even at the state levels, whether it is urban infrastructure development like metros or state highways or state roads. So I think that theme will continue to play out over the next 5 to 10 years. So these are the broad three themes which I believe will play out from long-term perspective, and accordingly, our portfolio we will continue to realign and navigate it towards the opportunities that we see from long-term perspective. As to what percentage is done and what percentage needs to be done, I think it's an ongoing process, I would say, Manish. Because it depends on opportunities which are available at any given point of time.
Okay, so Mr. Ghanshyam Sharma has one question. Right now, Indian rupee are coming down in comparison with the dollar. Certainly, it will impact the performance of funds in long term. So, do we have any precautions or any alternative to this? Please elaborate.
Yeah, so I think rupee depreciation or rupee coming down, right, is essentially, I mean, there are positive and negatives to it. Positives, so let me first talk about what are the positives. Positives is essentially it benefits the export-oriented companies. So be it IT companies or the metal companies or for the textile companies or chemicals companies. So any sector where there is an export opportunity, currency depreciation helps because you become so much competitive in the global landscape. So when, for example, when you're talking about textiles as an industry, so we know that Bangladesh is a big player, Pakistan is a big player, and their own currency movements and the government incentives program which is there, and plus labor costs, right? So you have to fight battles on multiple fronts. I think currency depreciation helps you in the sense it makes you slightly more competitive versus other countries. Obviously, it depends on the relative movement of currencies of those countries also. But net, it's positive for sectors where export-oriented sectors. On the negative side, I said it's more about it hurts the imports because imports becomes slightly more expensive. So I think that is something which will be negative for companies, import-oriented companies. So I think broadly those are the two things that one needs to look into while constructing a portfolio. Obviously, the tailwinds, basically the positivity of currency depreciation will reflect into more export-oriented companies, and appropriate time, depending on the valuations and growth that we see in those companies, we will be looking to increase exposure or initiate exposure into those companies across sectors.
Okay. So I can also see a few of our participants have raised their hands. So I would request you if you can just put up your question on the Q&A segment. I'll ensure that your questions are being answered. So now moving to the next question. So one of our attendees, he is actually putting him a question. So as per the view, you think quality will again underperform since we are moving from growth to quality?
No, essentially, okay, now there are two parts to it. Quality doesn't mean that they are not growth-oriented companies. So there are many quality companies. And the reason why there are quality companies is, okay, so let me just define what I mean by quality. So quality companies are essentially companies which has a very strong business model. They have a strong competitive advantage and they have a good management. And because of these reasons, to add to it, they have very strong moat, and that moat could be by way of products or R&D or distribution network or service orientation, which gives them an upper hand over competition. And that's the reason why this company tends to do well versus its peers in the sector. So quality doesn't mean that they are high quality companies, but it also means that they are also have a competitive advantage, and given the opportunity, they tend to outperform on growth. So I think that is something that quality typically means that that the strength in the business gives you that advantage to grow higher as compared to its peers. So it's not that these are zero growth companies. So that's one, and therefore from our perspective, we are looking at maintaining a balance in terms of quality as well as growth in the portfolio. So quality companies which exhibit growth and which are available at reasonable valuations, I think that is something that will continue to be there in our portfolio. See, my investment philosophy, when I said that growth at a reasonable price, so that's something that is an overlay over the entire portfolio construction process. I think one more important point which I like to highlight is the absolute upside which the stock offers also plays a very important role. So when you look at any company, and I look at what could be the target price based on the growth and valuation expectations going forward, when I look at what could be the earnings growth, and therefore what could be the valuations and returns expectation over say next 1 year or 2 year, 3 year, as long as the company is expected to deliver strong absolute upsides from current levels, I think those are the companies which I will prefer to invest in the portfolio.
Okay, so Reena ma'am was actually, I think she missed on that slide. She is asking what changes you have made in portfolio and when can we see the impact on performance positively? And similar question coming from Nishit Parekh, by when you expect fund to beat benchmark consistently, and by when you expect fund to outperform benchmark with good margin, say in top 5, top 10 funds in the category. So probably what you can do, you can just show that slide, and in the meantime, you can also keep talking.
Yeah, so Manish, the changes essentially are, as I said, it's more to do with having a more blend of quality as well as growth in the portfolio. And, so this slide essentially will give you a flavor of, the changes that we have done in the last 6 months, essentially navigating or realigning the portfolio towards more growth. In terms of how this realignment or strategy will help improve the fund performance, I think it's already started to reflect in the fund performance here. If you see the last 3-4 months, we have started to gain here. That means, and again, if you look at this particular chart in the last, which is April, May, June. And even in month, when you look at July, because full month is not completed, but we have started to outperform the benchmark. And I think as long as we do this consistently over a period of time, we should be able to generate a good alpha in the portfolio. So I think that is something is a very clear strategy and objective of managing the portfolio is we have to deliver alpha on consistent basis, and to be able to generate alpha, I have to kind of identify sectors using the top-down approach and stocks using bottom-up approach to construct the portfolio to kind of deliver outperformance on consistent basis over the long period of time. So that is a single most objective, and at the same time, risk management is also very important. I mean, to be able to deliver that superior alpha, I don't want to take undue risk in the portfolio, which kind of will weigh on the portfolio performance basis, undue risk which could impact the performance. So I think that is the clear thought process.
Okay. So and thank you, Nishit Parekh, for being with this fund for last 4.5 years. And apart from this, so few more questions, Atul, that few of our say participants are asking, especially Madas, Sridhar, Dilip, Pansuria. So they are actually asking that many of the investors who are having their SIPs running in this fund, and they are largely not very satisfied, especially with last 3-4 years, and many who have invested lump sum. So they are still not happy for last 5-year return also, because something that Mr. Sridhar has mentioned is this scheme is given 6.5% return in last 5 years. So what is your message for those investors who have stayed in this fund over a long period of time and who are having their SIPs running in this fund? What is the assurance that you want to give to all those investors?
So in terms of my own view is obviously the objective is to come back and recoup some of the performance which has been lost. And as I commented in my opening remarks, is the second half of 2020 and 2021 was bad for the fund, and which kind of impacted the long term, which is 3-year and 5-year performance as well. But I think I remain reasonably confident that with the changes in the portfolio, we should be able to come back. But in terms of delivering performance on incremental basis, obviously, it's not going to happen overnight because this journey will be over a period of time. But the changes that I have been making, we have seen positive results in terms of the fund performance relative to the competition also, and relative to the benchmark also in the last 3 to 4 months. I think if we continue to do this, we should be able to deliver a decent quartile 1, quartile 2 performance over the next 6 to 12 months. So I think if somebody wants to take a long-term view, I think it's the growth and GARP as an investment philosophy generally works well across market cycle because it protects you on the downside as well, and in the upside also you are able to capture upsides versus a pure quality strategy. So I think that is something that gives me confidence that we should be able to come back in terms of gaining the lost performance, but it will take some time.
Okay. So one more question is that you mentioned 3 reasons towards inflation coming down. So can you explain it once more?
Okay, so I said 3 reasons for the view that inflation has peaked out. One is initially government has taken initiatives to cut taxes on petrol and diesel, so that has helped to bring down petrol and diesel prices. So the direct impact is the price that we pay as a consumer for petrol and diesel, that has come down, and the indirect impact is because petrol and diesel in particular is goes as a transportation input for movement of goods across, whether it is steel, cement, or vegetables. So as your transportation cost comes down, the inflation for all the commodity where the transportation cost is relatively higher comes down. So that is a direct and indirect impact of cut in taxes on petrol and diesel. So that was one. The second is the crude price itself which was hovering 120, 130, and that has come down below 100. So I think that is something will again reflect in the overall crude basket price for India coming down. So if you look at year to date, the Indian crude oil basket average price for this financial year, year to date, is about 107, 108. Currently, we are at say below 100. So if oil continues to remain below 100 or it trends towards 90, the crude price will continue to drop, and therefore we will see that again direct and indirect impact, positive impact on petroleum prices coming down, and therefore inflation coming down. So that's the reason why I believe that the inflation has peaked. And again, the third reason is other commodities also have prices have also softened. So which is like steel prices have come off. So steel is a raw material for automobile. So that cost inflation which automobile companies or auto ancillary companies were facing, or consumer durable companies were facing, that comes down. So that again is a positive for growth and margins for companies.
Okay, so Atul, Mr. Bhavin Jain is asking that we have actually increased our stake and we have got Maruti Suzuki in the portfolio, whereas his view is that Maruti Suzuki is not into EV and they are also struggling in SUV segment. So can you throw some light or rationale on what was the say rationale between getting Maruti Suzuki into the portfolio?
Yeah, no, I think it's a very good observation. Two points to this. One is obviously EV is a very strong long-term.
You can stop sharing, Atul. I think your face is not also. Yeah.
Okay. Yeah, I think it's a very good question. And from Maruti's standpoint, I think EV is a very long-term story in India, and I think for the next 5-10 years, EV, particularly in passenger cars segment, will grow, and Maruti doesn't have strong presence in EV at this point of time. But I think what we need to understand is from India's standpoint of view, there is still good demand for cars in the small and mid-sized segment where Maruti is a dominant player. So that is one. Two is in terms of Maruti's own launch pipeline. Okay, so they have, if you look at their pipeline, so there's new Brezza which will be launched. There is a new Ertiga which will be launched. There will be a new product called Grand Vitara in the SUV segment which will be launched. They have a tie-up with Toyota, and Toyota has launched Hyryder, which is a competition directly to Seltos and Creta, and that particular product, which is built by Toyota, will be available in Maruti Suzuki's network. So Maruti will be selling that product. Same as Maruti's Baleno and Brezza is sold by Toyota across the network. Similarly, Toyota's products will be sold by Maruti, which is again, if you look at Hyryder and their initial feedback, it's very, very positive. So I think with this launches, Maruti will gain back share in the SUV. EV is something which we'll have to wait and see Maruti and Toyota's, because they have tie-up their own plans to launch EV. So that is still some time away. But I think in the near term, I believe with this launches, we'll see good growth coming back. And also one of the reasons is Maruti's own production was getting hampered because of lack of availability of chips. So I think with the semiconductor issue getting resolved, I think the volume growth for Maruti will come back, which is stagnant around 150,000, 160,000 vehicles per month. And within that, with the kind of new launches that they have, their high value product or the high ASP product, which is Brezza or Ertiga or the new Grand Vitara or the new SUV launched by Toyota, which is Hyrider, that sales will be much higher, and that will help them to increase ASP and margins going forward. Also, the commodity prices have come down, so the metal prices have come down. So again, top line growth will be good because the volume growth will pick up, and margin growth will be better because their input costs have come down. So that means that earnings growth will be much faster, and that's the reason why Maruti as a stock, we went to 6,500 rupees and then it has bounced back from those levels. But it's a good long-term story, medium-term story to kind of hold on to. EV is something, a strategy that we'll have to see how it pans out going forward.
Okay. And also, so few of our participants are asking about our take on Motherson Sumi and Honeywell Automation.
Right. So I think let me first talk about Honeywell Automation, because that was a very large position for us in the portfolio. Essentially, what happened in the last 1.5 to 2 years, Honeywell has about 45% export revenues, and by export is basically they provide services to Honeywell Automation Global. And what in the last 1.5 years, what has happened is because of chip shortages, the project business of Honeywell Automation parent got impacted, and because of COVID, the engineers could not travel to commission the projects. So that's the reason why and exports is a very high margin business for Honeywell Automation. That's the reason why you've seen that over the last 1.5 to 2 years during COVID time, their growth has come down because exports have slowed down because of the reasons I just mentioned. And now things are reversing. So your chip shortages, semiconductor shortages are getting addressed. International travel is opening up. So now, Honeywell engineers can travel and execute the projects globally. So that will lead to export growth coming back. We expect that to get revived in the second half. And therefore, from there onwards, we'll see a slow revival in growth and margins for Honeywell Automation. So that's on Honeywell. The second view is on Motherson Sumi Wireless, because that's the name that we own in our portfolio. So there are two companies. One is Motherson Sumi, which is the global company, auto ancillary company, and Motherson Sumi Wireless is basically into wiring harness company. They provide wiring harness. So the beauty of this company is, wiring harness as a product is independent of the fuel that you use. So whether it is petrol engine or diesel engine, or whether it is EV, it is neutral. So in fact, when the electronics component in a car goes up, and that's had been the trend for the last 5 years or 10 years, as car becomes more tech savvy, a lot of electronics are getting embedded in the car, the requirement for wiring harness actually has gone up. So when you move from within petrol or within diesel, when you move towards slightly higher end cars or higher features and higher electronics, the demand for wiring harness goes up. Second step is when you move towards EV, the demand for wiring harness even goes up more than what is required in the traditional petrol and diesel engine. So again, from EV as a trend, that's something that that is going to play out in the next 5, 10, 15 years. I think Motherson Sumi Wireless, which is the domestic wiring harness company, stands to benefit from that trend.
Okay. So two more, again, similar question. One is how are you playing commodities in your portfolio? And second is the current portfolio is designed for 6 months or with 3-year plus view?
So as a philosophy, the portfolio or the stocks or businesses which I invest is essentially from 3-year and 5-year perspective. So that is a clear thought process, because any business has to be evaluated from medium to long term perspective. So that's a very clear thought. That any companies that we invest is from medium to long term perspective. So that's a clear thought we have. And as I said, the portfolio is in transition, depending on what are the opportunities which is available, and therefore we will navigate the portfolio accordingly. So basically, the idea is to be agile and open to opportunities, but again keeping in mind what are the long-term opportunities and the way we want to play the India growth story from medium to long-term perspective.
Okay. So many of our attendees who had put up their questions, we have answered. Few attendees have still raised their hands, so I'll try and allow at least 4 to 5 such attendees if they can ask their questions directly with you. So I'm just unmuting Mr. Rohan Hande. Mr. Rohan Hande, if you can unmute yourself. Or from
my question has been already answered.
Okay, thank you. Then we have MF Money Financial Services. So I have unmuted yourself. Please, if you want to ask question.
Manish, this is webinar, so you can just ask the question to Atul. This is webinar platform. They cannot unmute themselves.
Yeah, because few were writing that they want to ask questions. So that's the reason I just thought of putting them. Anyways, so I think most of the participants have got their answers, questions answered. And Nishit Parekji, you're writing you missed some part of the session. So definitely we will try and share with you especially the portfolio changes and a few things that Atul shared, and even you'll get a short snippet of this entire session that we had. So that will help you in terms of understanding and getting that confidence back. So thank you, Atul. So thanks for sharing, and I think today's session will give lots of confidence to our partners, especially in terms of definitely. I think there had been certain learnings, certain challenges that this portfolio has gone through. We are totally in line with that. We empathize with all our investors. In fact, I think most of us also have got our investment into this fund because we all have to do this tax benefit or tax planning for ourselves. So definitely, we all are also invested into this fund. We all have also gone through that tough time. But looking at the way you are now looking at this portfolio, designing and putting this portfolio in place, so definitely we are getting that confidence and some bit of early signs of performance coming back, and at least staying tall during this tough time is definitely something which should give lots of confidence. So before we close, any closing remark from your end, Atul?
No, I think I would like to thank all the participants to dialing in this call. And I know last couple of years has been tough for all the investors, and the kind of changes that we are incorporating. I have no doubts that the fund will again come back and deliver superior risk-adjusted returns. And so just be patient, and I think we will come back and deliver you a good performance. I think that's something that I have done in the last many years, and I think there's no reason for me to believe that I won't be able to do that. So I think we'll repeat and deliver good performance to our investors. So just thank you so much, and take care.
Thank you everyone for your participation.